Hi everybody, my name is Aman. I'm an investment coach at Sage Investors, and welcome to another edition of Stock Talk, where we talk all things investing. For those of you who've been following my website, tap into my website, www.sageinvestors.ca. One of the things I've done over the past many years is I've always had a blog out there where I kind of update and post various different observations that I have of consensus thinking on various issues in the economy, in the stock market, and general pop culture. Because one of the interesting things about investing is the behavioral side of understanding why people make decisions that they do, and some of the biases that we have that can influence cloud our decision making. And one of the big biases that we all face is the whole groupthink mentality, and we tend to want to gravitate to people who have a sort of consensus view of the world, of what the future holds. And oftentimes in investing, that's kind of a dangerous thing, because a lot of times if you're following the crowd and chasing performance, that often leads to a lot of disappointment. And so one of the things I've always done, and for many years what I've done, is try to track or highlight or blog about different consensus viewpoints that are out there, and to use them as sort of a contrarian indicator, where I see positive giddiness, kind of euphoric kind of consensus thinking can often signal a negative outcome in the future, and vice versa. So I used to blog a lot about that, and I used to have a whole blog page dedicated to that. But because now I'm kind of moving away, doing a lot more like this, so talking a lot more and writing a little bit less, I've kind of put that aside. But it still doesn't mean I don't, for my own personal personal interest, track what various consensus thinking is out there. So I just posted I put a post up on my website yesterday, outlining some different levels of consensus thinking, both positive and negative, just to kind of put together a little bit of a snapshot in terms of what's the overall sentiment of investors and of the stock market overall. So I thought I'd just share with you a couple of things that I've come across in terms of that consensus type thinking. One article that I came across was a research report by RBS in January that came out, and it basically was a very Chicken Little type of analyst report, which is really surprising to hear. You just don't see a lot of analysts screaming "run for the hills." But anyway, this RBS report basically recommended to its clients to basically sell everything, quote unquote, sell everything, and to quote unquote brace for a cataclysmic year. And this was at the time where the stocks were, in January, were really pulling back, and it was just really interesting to see that kind of mentality out there, especially from an institutional type of analyst. So that was one that kind of jumped out at me. A second one was a report I found in the Globe and Mail. It was basically a survey taken of the Tiger 21 Club, which is considered in Canada sort of this uber elite group of people, of investors, of business people, sort of the uber elite of the Canadian economy. And they chimed in with a survey in terms of their predictions for 2016. And so overall, that consensus, the Tiger 21 consensus, the high net worth consensus, what they're looking at is they're projecting, or what they're seeing out there, is that the Canadian economy is going to be getting weaker. They're seeing that at some point real estate prices in Canada are probably going to pull back, specifically I guess in Toronto and Vancouver. They see the Canadian dollar as getting weaker, going even below 70 cents. Their viewpoint of the U.S. economy is that they expect to see it improve modestly in 2016, and they also project that commodity prices commodity prices have hit bottom. Sorry, the phone rang there. Commodity prices have hit bottom. So that was one interesting consensus viewpoint. Another consensus viewpoint I came across was that there was a report from the CIBC talking about how investors, Canadian investors, are hoarding cash like nobody's business, and the level of cash being held by Canadians is at the highest level since about 2011. and which is interesting because, again, when we're looking at consensus thinking, when a mentality is that if a lot of people are holding on to money right now or are going in cash, it's usually a time when you shouldn't be going into cash. And this was all at the time when the stock market again was crapping out a bit in January and February. So it's interesting that people are going more to cash when the reality is, from an investing perspective, that's the time when you actually should be putting money to work. So it was an interesting take from the CIBC report. Another report was from Barron's, and one of the things I always look for are magazine covers or newspaper covers, because they usually, when you see a flashpoint kind of cover that marks sort of a peak or a low value in a cycle of something, it's usually sort of a jump the shark moment where that peak has occurred. And in the Barron's, in February 8th, they put out an article saying that the world is we're approaching a world of $20 oil, and they put it big on their cover. And when I see covers like that type of things, where that kind of like pounding the table on a certain thing that's going to happen, chances are it's not going to happen. Sure enough, as soon as that issue came out, oil went, instead of going downward, has gone upward. It's gone up to now $33. So go figure. So magazine covers are a really interesting take in understanding consensus, because it usually marks a peak or a bottom of a cycle. And so in that case, that oil cycle may have been the bottom. Finally, another article that I came across was a research report by Manulife talking about how Canadians now, over the last few months, in the last 6 months, have really lost a lot of appetite for holding investments, specifically mutual funds, ETFs. The confidence level that Canadians have in those products have gone to have reached the lowest level it's had in about 6 months. So again, another indicator that, you know what, if retail investors are starting to shy away from investing and from stocks and putting money in the stock market, that might actually be a signal where, you know what, maybe we want to start looking at starting to build positions in the market. So another interesting retail consensus viewpoint. And finally, the last one I had is from the States, the American Association of Individual Investors. They usually post a weekly kind of sentiment indicator. They poll their members in terms of whether they feel bullish or bearish on stocks. And in a more recent report, their survey revealed that retail investors, or their members, have reached the lowest level of optimism about stocks since 1993, and that's like saying something. So there's like a lot of uber bearishness out there in terms of investing, in terms of the stock market. The events of the last couple of months may have really freaked people out. And so when I look at that and that level of negativity that seems to be pervasive in the market, that usually would be a signal for me that this is a time where I think I need to take dust off my list of stocks that I'm looking to buy, that I wish to buy, and check out and see maybe those stocks have now become a little bit more affordable. And if the fundamentals of the business have stayed the same, then this is the time. This is the time where you buy low and you sell high. And it's, from a value perspective, that's usually how you do it. So it's interesting that there seems to be a fair amount of negativity in the market. So I was trying to look for, on the flip side, I was trying to look for some positive moments of consensus thinking out there. And the only one thing I could find out there was that a survey came out talking about more and more Americans now are quitting their jobs. They're quitting their jobs to find other jobs, and it's reached a very high level. And to me, it's a positive consensus indicator. Is that if people are willing to quit their jobs, it means that there may be something better out there, and that's usually a good sign of a healthy or a growing economy. Is that there are opportunities everywhere to increase income. And so if people are feeling more confident in themselves and in the job market, that they're willing to pitch where they are and go somewhere else, then if that level of confidence is pervasive in an economy, that's a good thing, and it's a positive thing. So that's another element of consensus out there. Strange enough, it's the only thing positive I could find. Most of the consensus thinking out there, the market sentiment and the psychology out there is fairly negative right now. So So I thought I'd just share with you. Actually, you can check out my article that I wrote on this, where I go this into more detail and provide more links on my website. And that's about it, all I have for you today. If you have any questions, you want me to talk about a certain topic out there, investing topic you're interested in, give me a shout through Twitter. You can DM me at @sageinvestors or through my website, www.sageinvestors.ca. So that's another edition of Stock Talk. My name is Aman of Sage Investors, and we'll catch you again.